All right, my son and I did a little pre-market fresh powder run in Mount Vermeulen in our front yard. Check it out. He's on his skis. I'm on my snowboard. Got a nice little dump of snow. We're hitting the ski hills right after this video and to go ride it out. But it is an epic powder day. Good morning, traders. It's Thursday, February 13th. Going to flip through the charts real quick here behind the ball. Just record the video, and for some reason, I am having troubles with this new software update. It seems to be screwing things up. But long story short, yesterday we had a big gap down in the market. If we covered this in the aftermarket update, more or less we saw a big gap down yesterday in the SP 500 and the NASDAQ. And then as we know, most gaps get filled generally the same day, generally before noon. And we did see that market rally up, fill that gap. We also did see on the SPY, when we look at it, we also saw the the spike fill. We have these price spikes that happen on the chart. These are a leading indicator of where the market wants to go throughout the day. This huge spike I've coded in at a 3rd%, 50%, and 100% are where I usually like to lock in targets for. These are for very short-term day trades, obviously, but it gives us an idea as a longer-term investor what to expect. Knowing these little nuances really make the markets much more comfortable because you can feel it, you understand its characteristics. And more or less yesterday, we saw the market hit its 1/3% of the spike fill, which is where you'd lock in partial profits, move your stop to break even. We hit 50%, and then later in the morning by noon, we hit about that 100% level. This morning, we have another spike. It's already hit all the targets this morning at 8:30 hit. We had some economic data, and it created a quick pop. So the markets look like they want to hopefully go higher again today. When we look at the SP 500, we do have this bull flag pattern forming, a nice rally. It's been consolidating. The market just keeps getting hammered with bad news. Every time we have bad news, we see a big move down, but then the market's resilient. It comes right back. Another Monday with bad news. Another piece of bad news. Market bounced back. Yesterday, we had another piece of bad news with CPI, and the market clawed its way back up. So this is what's important, is to understand the short-term trend is up and the long-term trend is up. Obviously, we know when we are in a bullish environment, we've got our bull market signals, our bear market signals. We are still in a bull market signal, in a bull market trend. While it's not a super strong bull market, the market's going higher, so we must stay long the markets. We've had this really nice pop and this bull flag formation. And what's interesting is, even though we have a bullish chart pattern, the sentiment is very, very bearish. When we look at the SP 500 sentiment chart, when we have red on here, this is telling us everyone is bearish. They've sold their shares. They're betting on the downside. They're shorting. And typically when people are that scared, the market, once that selling is done, the market rips and goes the other way, and it takes off without them. Orange bars are the same, just not as extreme. People see a bounce up. They start to sell shares. They start to buy put options. They expect the market to roll over. And of course, the masses are trying to pick a top, which is not a good strategy. And the market pushes higher, squeezes them out of the trade. Then they double down, or they try it again, and they expect the market to roll over this time. And then the market goes against them. It hurts them even more. So not only do we have a ton of blood on the streets here of people really fearful, but we've had a lot of orange for a long time, which has built up this bull flag pattern. And we can even look at this larger bull flag pattern, this bigger pause for the market to potentially go higher. So that's what we're looking for, and to see if this market is going to push and run. Some of you seem to get my analysis and opinions confused. I am bearish on the market. My opinion is I do think this is going to be a terrible year. I think things are going to get ugly, but it doesn't mean we bet on the downside. And it doesn't mean we skip out on the uptrend. We still take part. If the trend is up, we want to be on it, ride it higher, no matter how much we think the market is going to fall. And the market climbs a wall of worry. So generally, us being worried all the time and the market going higher is normal. It's just a matter of that we have a strategy that when things do roll over, we don't ride it down and we move to something to take advantage of falling prices. Other than that, taking a look at the other markets here, we've got bonds, took a haircut yesterday. I've been talking about steer clear of bonds. CPI, interest rates aren't going anywhere anytime soon. Bonds are falling. They've been out of favor for a long time, and no point trying to pick a bottom there. The dollar has been building similar to kind of gold, a big, long, multi-wave bull flags. It has a huge leg up, a huge bull flag forming. We talked about this yesterday or the day before. It looks like we could go to 116 for the dollar. And that means we're probably going to see more chaos in the markets. Doesn't mean it's going to happen right now. This could flag out for another month or two before that takes place. So we'll just let all this kind of work itself out. Until then, we stay long the equities markets and some of the sectors and try to ride things higher. Now, gold is up about 0.4%. It had a lot of volatility yesterday. It doesn't look like it, but in pre-market, it sold off fairly sharply on CPI data, recovered to be relatively flat on the session, and today it's pushing higher, which is what it should be doing during this kind of uncertain time in the markets, the late bull market stage where a major top, I think, is coming, a recession is coming. It naturally should be very resilient and want to move higher. Oil has had a pop and a drop all over the place. I'm not a fan of oil. And natural gas, a couple members wanted to touch on natural gas. Overall, there is a bullish fundamental story behind it about tankers running out and the liquefied natural gas. We could have another big spike. But if we zoom in on the chart, the trend has been up. But as I mentioned in the last recording here, that didn't work. We've had one rally, sharp pullback, two rally, sharp pullback, three rally, very sharp pullback that actually has broken one low, two low, and now it's having a rebound up. And so this is the definition of a trend change, which is higher highs, higher lows, lower highs, lower lows, and it's a saw blade. And it looks like this is a reaction high into resistance, and we could see natural gas go down. So people are excited about natural gas. Generally, when everybody's excited and they're telling me it's going higher, usually it's going to go the opposite way. It's just the way it works. The market has a way of luring people in, and the trend here is to the downside. Lower highs, lower lows, and damage has been done. So that's more so what I'm thinking for natural gas is probably lower pricing at this point. Anyways, that's it for now. Talk to you soon. Bye-bye.